Investors and traders, welcome to the channel Market Chart Pattern. In this segment, we will be taking a look at the key US stocks that we have been following for quite some time. This video is for educational purposes only and it is not a financial advice. So guys, what we are looking at is a daily chart of Tesla. Today is the 26th of April 2023. And if you have been following our vlog for some time, you will know the pattern that we have been looking at, highlighted in the yellow shaded area. And if you are new to our channel or watching our videos for the first time, welcome to the channel. And if you like what we will be discussing here, please do subscribe to the channel. We'll be really appreciated. So guys, here this yellow shaded area is a key pattern that we were looking for a long time, and $210 per share level was a key resistance level which we had warned about in advance, and we just kept on discussing this level for several weeks and a month actually. So what this yellow shaded area is, basically it's the 1-to-1 ABCD formation, and price today closed right at this level. Below this we also have the 61.8% Fibonacci retracement, which is the retracement of this entire swing high from the low of around $105 per share level to the highs reached of about $210 per share level approximately. Also, there is a gap formation around here. So what we are looking at is there could be potentially a good level of support coming around this level where the market closed today, and between this 61.8% Fibonacci retracement, which is around $145 per share level. So this is why we say that this $145 per share level is actually a really key level to watch, and we will be paying close attention how the market is going to handle this level. Below this there is another level of support, but because we look at the level of confluence where the patterns and the Fibonacci ratios come together to give us a level of confluence, and mostly those levels are usually the ones to watch for because of the confluence. They have a lot of importance from an harmonic pattern perspective. So guys, this is what we are watching in Tesla, and let's see how the price is going to trade over the next few trading sessions. Okay, so let's actually move on to Microsoft. So guys, Microsoft, really interesting. Microsoft earnings were out yesterday, and this is today's price action. And what we have been doing is that we also have this yellow shaded area over here, and we were watching for this 3 drives to a top pattern here. This pattern formation actually worked quite well for a number of days, over a week actually. And yesterday on the 25th, just before, I think the day after the close of the market, the earnings came out, you can see the stock was sharply down. And today what has happened is that there is a pretty big gap up, but it has gone right to a very critical level, and that level is right to the 61.8% Fibonacci retracement of this high reached in 22nd of November 2021, which I believe is the all-time high reached for the Microsoft stock. So what I'm going to do is I'm going to mention that this is the 0.6 minute retracement, and it could be a tough resistance level. Just let's make it a little bit smaller. Here we go. Okay, so where we are here is the 61.8% Fibonacci retracement, and it could be a pretty tough resistance level. And what is really important for us to watch is the next trading session. So that is going to be for tomorrow's trading session, because the candle formation over here, it's a negative candle, and there is a pretty big gap up here. If the candle tomorrow opens with a gap lower and closes negative, then it's going to have a formation which is going to be pretty bearish. It's called the abandoned baby top formation. It is also a another formation which has pretty bearish kind of connotations. So guys, this is what we are looking at in the Microsoft stock. This 61.8% Fibonacci retracement comes around approximately $300 per share level, or thereabouts $299 per share level. And this is a really important one that we need to watch. If the stock is really bullish, then it should really take out this level to the upside on consecutive closing daily basis, with pretty much quite a lot of strength in it. And this is one of the things that we will be watching. Otherwise, there is a possibility that the stock goes for a pullback correction, and we'll be watching and paying close attention to that. Let's take a look at Apple. So guys, the Apple stock is pretty strong, but it has also reached the kind of levels that we had been kind of, forecasting in advance. So here what we can see is that it's just been, consolidating here. The earnings are coming out on, so next week, the earnings are coming out based on this. We also have some higher levels, which is about 171 to $174 per share level. But thereabouts is the region, and it looks like, after reaching our levels of about $166 per share level, the stock is price is just consolidating here. Maybe it is kind of, going for some sort of pullback formation. One of the things that let me point out. So this is the how much the stock had risen. Let's say in this segment here, and if I project it from here, let me actually clone this. So there we go. So that also takes us to about $171 per share level. So what we are looking at is, this is the concept of market symmetry that we really like to take a look at in this in our channel, because markets repeat again and again. And if we just take this, and if I just clone this one, and we excuse me, if I take it around here, there we go. And what we can see is that the market had pretty much respected this symmetry in a pretty close proximity. And also where the price now is, it's the hitting the upper channel line, which could also act as resistance. But with the earnings coming out, just like Microsoft, the earnings are going to be pretty good. We could have some surprise to the upside, and we will be watching the price action really carefully. With that, let's take a look at the Amazon stock. So the Amazon stock has been pretty disappointing in terms of performance when we compare it to the Apple stock and also with the Microsoft stock. So we were looking at a pattern formation of this ABCD highlighted in green, and perhaps if it is moving actually in this ABCD formation, then it could reach about $120 per share level. But we also have this question mark, because the price action has been not as strong. What we also had discussed at the channel was this $96.40 level. If the price was going to close above this, then it meant that there was a chance that actually this ABCD formation could actually be fruitful. So the price has been actually moving above $96.40, but it's moving in a fashion which is, also overlapping. So we will just be watching the price action. And also one of the key things to note is that quite recently, around 24th of April, it reached its 78.6% Fibonacci retracement of this leg high. So it's possible that, if the price begins to close below $102 per share level, it might actually be just going back to retest lower end of this trading range. And also in the news, Amazon was in the news today because they have starting a new round of their, unfortunately, the layoffs of their people in their cloud computing part, and that's something to do with human resources, perhaps. You can read about it, Google about it, but this is what the price action is telling us. Okay, guys, so what we also going to take a look at now is the Meta. So the Meta stock today, the earnings are out, and after the close, look at where the stock is. This is where it closed, $209.40, and after in the after market, it's $233.76 based on the trading view. So that's pretty good. But it shouldn't be too much of a surprise, because for a long time we were watching for this $200 per share level, which was gonna be 38.2% Fibonacci retracement, and it was going to be a pretty strong resistance level. But when the stock actually began to close above it, that was our first signal that actually things are much better with a Meta, and the price action is corroborating with it. And it closed for several weeks above 38.2% Fibonacci retracement, so its action is pretty good. Now after the earnings, I don't know in the next few days how the price action will be. Maybe the stock actually goes and pulls back. There is a pretty big gap formation here, although the gap was also filled right here. But after having a 50% increase, excuse me, retracement of all the pretty, that's a pretty significant drop if you look at the stock price from the highs, where it was once in $383 per share level, to going to about 83. That $300 per share drop in Meta is pretty big, and being able to retrace 50% of it, perhaps there could be some profit taking which might take place. I don't know. We'll be watching the price action around this 50% level really carefully over the course of next few trading days. Also, what we have to make note of is this huge gap formation here, which needs to be filled. So it's also possible that a strong momentum could actually take it back into this zone. Let me draw the 61.8% Fibonacci retracement. There we go. So that's the 61.8% Fibonacci retracement right in the middle of the gap. It's also possible that the stock actually remains strong, and the price tries to actually get to this level if it is strong enough that it's able to close on consecutive closing play basis above the 50-day 50% retracement level. Okay, guys, so this is Meta. Let's quickly take a look at Netflix. All right, so guys, here we go. Netflix. So the Netflix stock has had a pretty remarkable recovery, pretty much like the Meta stock. But what I would like to point out is, and we have highlighted this in our videos previously, this recent rally off the lows had just gone and coincided with the 38.2% Fibonacci retracement of this. I believe this was the all-time highs. So it's just a retracement at this point, just like the way we were looking at Meta. And what the price has done is it has been just consolidating, and it's just trading in a big range here. So from a pattern perspective, we are looking at two things in this pattern formation. So number one, because of 38.2% retracement being pretty strong resistance, if it's not taken out to the upside, it means that usually in strong trends, this 38.2% is a pretty strong resistance level. So we could have a pattern formation where we could have a one-to-one move, an ABCD. That's the way we like to describe it, which could actually take the stock right into about $270 per share level. And that's where we also have a 50% retracement of this low from here, going all the way to this 38.2% retracement at $370 per share level. And over here, yeah, there is a possibility it might could actually, move a little bit lower, maybe go up to 61.8% Fibonacci retracement, but the ABCD comes here, so it's going to be a pretty strong level for the price action to be looked at, and we will be watching this for sure. On the other side, the other pattern formation is that, for example, if the market is able to take out this 38.2% Fibonacci retracement level, which is around $370 per share level, which could mean that in fact the stock might be in this ABCD to the upside formation. And the reason I'm saying that is because the price had actually retraced this 38.2% Fibonacci retracement of this entire move high, and there is a possibility that what it might be doing is an ABCD formation like this high, which could see the stock going right into this gap formation here around $500 per share level. For now, I'm just going to remove these. And one of the key things for this one is, of course, that it needs to take these highs out. So let me actually, this one out. And one of the other clues that we need to look for is whether there is a chance for this to happen. If we just take a retracement of this, then 61.8% retracement comes around here. 78.6 is going to be around $300 per share level. So if the stock begins to close below the $300 per share level, this could mean that actually this ABCD formation might be in play rather than the ABCD to the upside. So this is what we're watching in Netflix. Let's quickly take a look at RBLX. I apologize, the videos are getting pretty long, so I'll try to be really quick with this one. So here, disappointing price action in RBLX. We thought we might have an ABCD formation to the upside, but we didn't mention there are a number of resistance level, and the one which we are highlighted in the shaded area from the structure is also a certain Fibonacci retracement of this BC leg that offered a pretty strong resistance, and the stock had actually gap lower. So we have earnings coming up. I don't know what the earnings might be like, but what it looks like is that this ABCD formation that we were looking at, in fact, might not be in play at this cycle level, and the stock could actually go and move lower, a little bit lower, and then we'll have to actually see, maybe it's able to find support around here, this region, about $30 per share level. If that's the case and it still begins to then move higher, this means that this C point was never taken out, so the ABCD might still be in play. So the price action is not, it's pretty disappointing price action in RBLX, to be honest. So it looks like it's just gonna go and tackle these lows around at $33.60, maybe even lower to about $30 per share level. Then if it takes out 25 this point C, which is around 25.50, we could have a different kind of pattern formation where we could have an A, B, C, D to the downside, which could actually take it around the lows around here, around the $22 per share level. So guys, this is what we are watching in these stocks. Apologies for the long video, it's around 20 minutes. If you like our analysis, how we look at these markets using pattern recognition, Fibonacci, please do subscribe to the channel. If you find it of educational value, do like the video. Thank you very much. Good luck and good trading.